Hey guys, we all know that the trading space is often filled with confusion and all manner of scattered information, making it hard to stick to a trading plan and achieve consistent income from the market. Therefore, in this video, I want to present the ultimate Forex trading strategy for consistent profits. I call it the smart money secret. I'll be teaching you how to spot and validate this pattern or strategy whenever you see it. So, if that's something you're interested in, do well to smash the like button to show your support and also subscribe to this channel if you're new. See you after the intro. Alright, welcome back guys. Let's get started. Now, take a look at these two diagrams on my screen. Please permit my dark mode. This is what I'm comfortable with. Take a look at the first. We have this. They are of two types. Take a look at this pattern carefully. See the other pattern. Both of them are actually telling the same story, but they might appear in different forms. Now, I think in my next video, I'm going to rather give an in-depth analysis of what market structure is all about and the various kinds of market structure. But for now, I'm here to talk about the ultimate Forex trading strategy for consistent profits. That is, if you want to experience progress, it's not just enough to be consistent, probably showing up every day. But if you want to experience progress in terms of your income, this is what really works. This is how I trade. I keep it simple. I keep it really, really simple. So sit back, relax, and pay maximum attention. And I'm pretty sure you're going to be glad you did. Now let me start by giving us a theoretical example of what market structure is. I'm not going to spend much time doing that. Theoretically, we were taught that this is what market structure is all about, which is not out of place completely. We have the higher low, we have the higher high. Now, this is the first break of structure. So let me use this. And then we have the second break of structure. And we have another break of structure. I'm just going to be talking about the practical aspect, what really works in the real life market. Now, this is what we were told. Okay, that when the market breaks a previous high, definitely there's going to be a retracement back into the equilibrium or probably the 50% fib level, and then market moves again, breaks, it keeps breaking until probably market changes character by taking out the previous low, right? Then market comes down and so on. Now, this was what we were taught, but in the real life scenario, in the real market experience, it doesn't really work this way, even though this is important, especially when when you are analyzing from a higher time frame. But without wasting much of our time, I'm just going to show you what you should be on the lookout for, what we want to see. Having understood how the market moves, like I said before, I'm going to give a better illustration in my next video. This is what we want to see. I want to redraw this pattern, and then I'll show us some chart examples. And then I'll show us some. Now, we always want to see, we are going to be making use of the swing structure, the swing market structure in this episode. Now we want to see something like this. Then we want to see a sweep of the previous low, and we want to see a break of the recent high. Okay, want to see a break of this recent high. Let me stop here. Now this is a swing structure. This is a swing structure you always want to look out for. Now if we are to analyze this swing structure to see how it really looks like, this becomes, if this is your sweep, this becomes your break of structure. Please guys, pay attention. I'm going somewhere. This becomes your break of structure. This becomes your swing low, and this becomes your swing high. Now, basically, if you take your Fib tool, which is your Fibonacci retracement tool, plot from this swing low to your swing high, basically, like I said, we'll always wait for the market to retrace back in an uptrend. We'll always wait for the market to retrace back into the 50% area. Before we can take a buy. Okay, because this becomes the substructure. When you go to the lower time frame, you see price, gradually becoming bearish until price gets here and probably fill an area of value. So when there is a valid area of value, or you call it your POI within this area, then you will have price do this. Price will change character on the lower time frame. Price will change character on the lower time frame, and once price changes character, boom, this becomes your target. Okay, now I just want us to, now let's take a look at this example. Let's take a look at the first type. This is our sweep of the previous low. Now this becomes our invalidated zone, or you call it the protected low. Okay, and we should take note that this didn't break this high. It actually came back down and then took off this. So this becomes the protected area, and this becomes the target. So what is now happening here? I call this place the SLQ, which is the structural liquidity. Now, excuse me please, it is this liquidity, or this structural liquidity, that validates this POI. It is this structural liquidity that validates this POI. So when you are spotting this pattern, ensure you always have a structural liquidity before your point of interest, before your area of value. Okay, this is the type 1. If you look at the type 1, it didn't break directly, or rather the momentum was reduced, or couldn't buyers couldn't actually take price above here in the first time. Okay, they came here, probably fill up some orders, and then before the 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 previous high could be taken off. That's that about the first pattern. Now this is the second pattern. Both of them are telling the same story. Okay, we have a sweep. This actually broke above here, which makes this a break of structure. There was a retracement down, and then another break of structure to confirm that indeed price is aggressively bullish. And now this, you have to identify that this becomes your structural liquidity. I just hope you guys are understanding me. This becomes your structural liquidity, or you can call it your inducement. Okay, because some uninformed traders can actually, some uninformed traders will do something like this. They can take their orders from this area. Okay, they might take their orders from this area thinking this is the protected low, especially for traders who do not have a good understanding of the advanced market structure. Do you get? So we just have to be very, very attentive and be careful while trading this pattern. Now, so what we are looking for is simply a sweep and a break of structure, and we want to always be sure that there is a structural liquidity before our area of value. And another factor to consider why trading this pattern is that your area of value or your point of interest should not be mitigated. It should be fresh and unmitigated. Okay, and that is why whenever I'm trading, I always place my SL below my invalidation zone or my protected area. Okay, below my invalidation or my protected area, and then I get to target this high. But I really don't get to target those highs. My risk to reward ratio is always a max of 1 to 3. Okay, max of 1 to 3, I'm out of the market, and minimum of 1 to 2, I'm out. Okay, so let's look at the charts. Let's look at the chart to see some practical examples. Now this was a trade, or this is a trade rather, that I took on Euro GBP. Okay, even though it was a counter trade, but look at the pattern that actually got me into this trade. You can see the same thing I explained was what played out here. You can see a sweep of this previous low, and then price rallied around this area without taking out the recent high. Okay, which has made here our structural liquidity, which has made this area our structural liquidity. And then price broke above this recent high. Price broke above the recent high, that has, and which has actually made us confirm that this market is going to be bullish. So what is your duty as a trader? Your duty is to tell the story and then patiently wait for a retracement. Patiently wait for the correctional phase of the market. Or, like I said before, these are substructures. the market price must actually come back to fill all these areas. Okay, price must definitely come back, and as we can see what happened, price came, took out this structural liquidity, price took out the structural liquidity, tap into my POI, which is my point of interest. Okay, probably in subsequent videos I'm going to I'm going to um, I'm going to talk more on how to identify a valid POI. Now, if you can you can call this a breaker block on the lower time frame, but yeah, to me it's a QMR, okay, which has not been mitigated. Okay, your POI can either be your breaker block, your mitigation block, or your QMR or your order block. So far it has not been mitigated, and then there is a structural liquidity to validate this POI. Okay, then you can go all in with confidence, but mind you, you have to always learn to stick to proper risk management, manage your risk carefully. Now I got a 1 to 3 RR from this trade. Okay, I got a 1 to 3 RR from this trade. It's very, very simple. This is what you should actually be looking out for in the market. Don't complicate things for yourself. Oh yeah, this is also applicable to um, the bearish market. Like when you want to sell, I'm going to show us some other examples where I sold with this same pattern. This is very simple. Like I said before, you want to see a sweep of the previous low when you are buying, and then you want to see a break, and probably this is the second pattern, another break of structure. And what will you do? You are waiting for price to take out this structure. This becomes your structural liquidity, and then you wait for price to take out this structural liquidity, tap into an area of value around here, either your QMR or any kind of order block, breaker block, mitigation block, or whatever. Price taps it, and then price will definitely go in your direction, which happens to be the minor structure, like for your continuation. You understand? So these are what we always want to be looking out for. However, if it was that easy, everybody or all traders would have been a multi-millionaire in dollars. There are factors to actually consider while spotting this pattern, and in my next video I'm going to be discussing those vital factors to consider, which one of them is the key level. Okay, I call it the key level, which is also known as the higher time frame point of interest. Okay, the higher time frame point of interest. Now, if this was to be the daily, as for me, I take most of my entries from the 1 hour minimum. Okay, and then for the 4 hours, I spot my pattern on the 4 hours. Sometimes I spot it on the 1 hour. Okay, because I've probably seen a reaction from a daily or a weekly key level. I've seen a reaction from a daily or a weekly key level, and then I pull the trigger on the 4 hours or the 1 hour time frame. Now let me show us another example of a trade I took on, say, USD CHF some time ago. I had all of this. So the same thing, keeping it simple, because this is what really works. Now, this is exactly what I explained before. You can see a sweep of this previous low, and then we have our structural liquidity, or you call it your inducement, and then we have a break of this recent high. And what happened? You see price gradually retracing into my unmitigated area of value. Of course, price is going to take out the structural liquidity, which is, you see, price actually took it out aggressively. So you have to learn to spot where the liquidity is so that you don't become the liquidity. Okay, you don't trade from areas like this. You patiently wait for price to get into your POI. Probably use you placing a limit order or executing while price is in your POI, and you target the external range liquidity up here. But as for me, I only do 1 to 3 RR, which is this. So price was actually bearish, and this was supposed to be the overall target from the weekly time frame, and I saw a valid shift, which is also known as probably change of character. So a valid change of character, and I pulled the trigger. So that was how I was able to leverage on this opportunity and made some profit. Okay, I've shown us two buys examples. I think I had a sale on NZJPY some weeks ago. The same thing is what I'm looking out for. So you can see a sweep of this previous high and then a break of structure. This is a break of structure, a break of the recent low, and then price retraced back into the area. There's something I actually forgot. I'm going to do another video on it, but this being the first video in this channel, I'm not expecting any form of perfection. I'm just trying to pass a practical message of what actually works. Now, how do we validate our structural liquidity? You can validate your structural liquidity by simply taking your FIB tool, plotting it from this is a bearish market. Now you plot it from the lower high to this point where it broke structure below. Okay, and you can see a retracement back into the 50% area. You see a retracement back into the 50% area, and then there is a break of another structure, confirming that indeed price is going to be bearish. And then what happened? This is my QMR here, which happens to be my POI. I patiently waited for price to tap into my POI and then look out for sell opportunities. I was able to do a clean 1 to 3 RR in this trade. Okay, so your FIB level, your structural liquidity should always be above the 50% area for a sell model. Then for a buy model, it must be below the 50% area for buy opportunities. Okay, this is how to validate your structural liquidity. So it's pretty simple. Let me illustrate it better. Now, what we actually want to see for a buy setup is a sweep of this previous low, and then probably something like this, leaving us with an area of value, and then a break of structure. Sorry, let me take that again. We want to see a sweep of this previous low, something like this, and then a break of structure. This is what we always want to see. So this becomes your break of structure. This automatically becomes your structural liquidity. And how do we validate the structural liquidity? This is the sweep of the previous low, which is very important, and this becomes our protected low. Your stop loss should always be a little bit below your protected low. When price takes off this low, then this setup has been invalidated. So now another thing to take note of is validating your structural liquidity. Now, first of all, if we plot our fib tool on the entire swing structure, we always want to look for buy opportunities around the discount area. Okay, having seen your swing structure, you don't have any reason to buy in the premium area. You only look for sell opportunities around the premium areas. Around the premium area. Okay, while you look for buy opportunities around the discount area. Now, but to validate your structural liquidity, you want to plot your fib tool from your protected low or from your previous low to the recent break of structure, which is this. So far, your structural liquidity is inside the 50% area of your fib tool, then your POI has a better chance of holding, especially when it has not been mitigated. I feel I think I've done justice to this pattern, and it's simple to really understand. It's simple to understand. Let me take this off gradually. So guys, this is everything you need to know about this pattern. You want to see a swing structure, you want to validate your structural liquidity, and you want to always see an unmitigated point of interest. Then you can pull the trigger. Same thing, I trade every time, same way, same system, same pattern. Okay, so there might be some things that I've actually skipped, but this pattern is what you should always be on the lookout for. Now, there are no stupid questions. If you feel confused about anything that I've been saying, just drop it in the comment section, and I will create time to answer all questions. And then this is, like I said, this is my pattern of trading. This is the only way I trade, and I do share my setups for free. I have a free Telegram community where I share my setups that will help you pass your prop challenge easily. The marks of 2 weeks, you've actually passed your phase 1 and phase 2 of your prop challenge. Do well to join the Telegram community and benefit from my setup, and you get to benefit from other trading insights that I will be sharing for free. So guys, if you have gained value from this content, please show your support by smashing the like button, subscribe to this channel if you are new, and turn on your notification bell so that you get updates whenever I drop further videos. Okay, this channel is just going to concentrate on the things that actually work in the forex market, the things that work. I'm not a fan of this too much grammar or probably quoting theories here and there. Stick to this channel, and I'm pretty sure you will learn a whole lot and become profitable. So that'll be all for now, guys. See you guys in the next video.